Hello, fellow traders. Curtis from Beyond Backtesting here. Today, I want to show you a hypothetical, completely hypothetical example of how one could take $2,500, approximately $2,500, to $500,000 to $800,000 in 1 year. Actually, to $800,000 in 1 year, and assuming very modest assumptions, probably less than what you're trying to do today. Okay, assuming a very modest return, probably less than what you're trying to do today. Now, before we get started, I want to say this: this is clearly all purely hypothetical, purely a set of presumptions or assumptions that may or may not be true, will probably not be true and exact in anyone's case, right? Futures trading, let me just read this, please read this disclaimer right here in full. Futures trading is risky. Hypothetical performance is just that, hypothetical. Don't trade money you can't afford to lose. So in my last video, I shared how one could, the power of trading multiple accounts and how one could multiply the earning potential to those multiple accounts. But I didn't look at it over time. I didn't look at it over time assuming that one tried to compound put their returns back into their account. Not even compounding, just put their returns back into their account. And when you do that, you see a very well. What we're going to see here is how one could take essentially $2,500 to $800,000 in a year. So what we're assuming here is, I think it's pretty fascinating. And the reason I want to share this is not to say, okay, take $2,500. And normally I don't do stuff like this because, this is hypothetical. Probably nobody's going to do this in actuality, or very few people would actually be able to do this. But one of the reasons I show this or share this is because this shows what you could do with a very modest return, certainly less than I've tried to do myself in these trials. It's probably more than what you're trying to do too if you're doing something like this. And I just want to show what's possible. So I'm assuming, here's the first, look here, if you focus on in this area, I'm assuming you do the Apex Trader funding 50K account. So you're not risking your own money, or you're not risking your money in the market. You're risking money, but not in the markets. And I'm assuming that you do a 50K account, quote unquote, with $2,500 risk. And so you're paying $167 per month for that account. I'm assuming you get a 50% discount, and we're assuming you sign up for 5 accounts. So your monthly fee on that basically is $418. Now I'm also assuming that you make mistakes and you reset each month. Okay, so you're actually paying $818 out per month. Okay, and I'm going to assume this is, in this example, I assume that it takes you 3 months to pass. Each month you reset once per month. And at the end of 3 months, you've paid in $2,500, basically to trade on the simulator, right? Starting the 4th month, I assume you pass at the end of the 3rd month. Now, that may not be true, right? It may take you 5 months or 6 months. But what's interesting is even if it takes you 6 months to be able to pass at these 5 accounts, in terms of your cost, it's only adding. You just take this example, and now it's 5K to 800K, right? It's 5K. In the 18 months. Okay, this is in 1 year. This 18 months. So really, what's interesting about this is actually, if we're in a ballpark about what could be possible, it doesn't matter if it takes you twice as long or if it's twice as much. And again, I'm assuming you reset every month. You wouldn't just have to do that. You could obviously stay on the simulator for 3 months, 6 months, try to prove it out before you even risk even money by paying these trial fees, which could be, depending on your situation, that might be a lot of money. But the thing is, we're going to assume that this is the set of assumptions we're using. On the 4th month, you start trading live. Now, here's where it gets interesting. And I'm going to assume you're targeting, so we see you have $2,500 risk times 5 accounts. Your total risk is $12,500. I'm assuming you're risking and you're targeting and you're risking about the same amount, which is about, I'm assuming 3% of your capital. Now, if you hear about different, from different trading books and stuff, you hear about 2% risk per day. Is reasonable. 3%, if you do the Monte Carlo analysis, if your probability is, let's say, minuscule or exceedingly low at 2%, how much more can it be at 3%? How much more can it be at 4%? Now, if your risk is high at 2%, obviously putting it at 3%, it's going to make it much higher. The point being is, if you have a certain level of consistency, then a 3% risk is not it could be aggressive, but it's not as aggressive as one might think. For an active day trader, futures trader, about 2 to 5% risk is probably within the ballpark of reasonable based on my experience and knowledge. What does that look like? That looks like a $7,500 return, okay? And you have 425 expenses on those accounts, so you net $7,000 on the 4th month. But I want to show you something here, right? And on a per account basis, okay, you're actually targeting $75 per day. And this is why I want to share this example. I wanted to see what's possible, but I can tell you I target much more than that. And maybe that's the problem is we're trying to do too much and just trying to target on one of those accounts $75 per day it will lead you taking will produces this result, right? So you're only risking $75 per account per day. And that's what you're attempting to make. You're only attempting to make $75 per day, right? So again, your return objective is very modest here. Now, starting the second month, we take the $7,000. You had the $425 expenses, so you net $7,000. We add that to your total risk. Okay, you take that at 3% return, and your return on that. Let's see if this is right. I mean, I have to see this myself because I put this in the spreadsheet. I want to verify it. So 19,525 times 3% risk times 20. So we're assuming you average 3% risk on your account per day, 11,745. Then you have 425 fees, so you actually have 11,320. This is a net. So the 6 months you're at 30,000, right? 3% risk. Okay, 18,000. And as you go on down, you'll see that at the start of the 12th month, you start your account balance at 507,000, and you end it at wow. It's just hard to you end it at 800, around 800 and some 811,000. Here's what's saying. Well, I get to count the cost off. Says okay, about $811,000. So that's it. 2,500 to 500, 800 a year. Now you say, okay, but what if this is this is hypothetical? It's probably unrealistic, right? But it shows the power of just trying to consistently make a certain return. And in terms of scaling in futures, there is no impact. You wouldn't be trading enough size to impact this until you at least got to probably this 12th month in terms of size, assuming that their copying or replication didn't mess you up, right? That could be possible. But in terms of what you would be trading with this size, assuming we don't know what they're doing, and I would imagine they're doing some kind of quantitative. I'm just speculating here. They're doing some kind of quantitative program, portfolio program, maybe hedging traders against traders. Who knows? But so that's what it looks like. Well, let's say you say, okay, well, yes, $75 per day, averaging $75 per day is modest, but it's still not realistic that you do it over 12 months consistently, right? I agree with you. I certainly agree. Take half that, right? You're still at, take half that, so that's 1.5%, right? Now you're targeting 1.5% per day, right? You're at 405,000. You say that you think that you can't pass in 3 months, right? $2,500. Now it's 5,000 to 500,000 in a year. Okay, this is the math, right? This is the math. This is not my claim. I'm not claiming you can do this. I'm just showing how this is possible. And myself, I'm targeting $200-300 on these accounts. It just shows it's probably way too much. And if I do manage to get funded, I'm probably have to. It'll make sense for me to scale it to lower my goals. And I think what this shows, if anybody can trade consistently to a certain consistency level, right? Then this is what happens. So I'm not claiming this is possible, but if it is possible to day trade with this type of consistency, right? Then this is the math, right? And it doesn't matter. Okay, you say, well, 3%, that's a lot, right? I agree with you. So take that return and take that $811,000, right? And you do most of the gains come in the last 3 months. Take that and divide it by 2. So now you're only averaging 1.5% per day, 1% per day, $405,000. So what does that look like, right? That looks like on your $38. Okay, so if you're trying to make $300 on these accounts, right? Like me, like I'm trying. That's my minimum target, $300. Today I put up over 2,000 on one trial. I'm close to passing it, but I've been close before, and you can't. You're never ahead because of that trailing drawdown. So I've been within several $100, a couple $100 like 3 or 4 times. So I don't say it's going to pass it. And really, what passing one account it is an accomplishment, but the real power is in passing multiple accounts. And of course, developing the consistency so that once you do go live, you can do something like this. But if you're trying to make $300, $400, $500 on one account, right? You say, okay, I want to scale this up. What if you just tried to make $37? What if you just tried to make $50? Right? Assuming your consistency, right? Then that's going to lead to this type of return. Now, obviously, if that's your target, your actual average will be less. So that is true. So in other words, if you're targeting 3%, because you're going to have losing days. So in other words, if you're actually only making 3% on your winning days, if you take half that, it would be half of this amount. So it'd be 400,000. Whether it's 400,000 or 800,000, whether it costs 2,500 or 5,000, I think this is a pretty powerful example, right? And this is assuming. There's different ways you could assume this, or different assumptions. Maybe it takes 6 months and it costs 5,000. But if you can develop the consistency, right, then this is what, and you scale in a quantitative, and this is just linear scaling, right? This is what it looks like. Okay. So yeah, I mean, that's pretty much what it looks like. And again, let's say that to hit this 3%, let's say you'd have to do twice that on your winning days. So your winning days, what does that look like, right, per account? $150. So you're basically targeting, in this example, to hit this, you're targeting about $150 on your winning days, assuming you manage to average half of that. Okay, $150, pretty modest. Consider many of us are trying to hit $200, $300, $400, $500, even $600, even $1,000, right? That's a pretty modest. And again, I think it just shows that if people are day trading with some consistency, this is what it results in. I don't know if it's possible. I don't know that it's possible. And it makes one think that if someone claims to be day trading and with a high degree of consistency, it really begs the question: if they've not got to a certain size account, then you got to wonder how that works, right? It don't work, right? I've never achieved this. Just to be clear, I've never achieved this level of consistency. And most of the time, I would say, if you're going to be trading, day trading or whatever, maybe you target a 50% return or something. That's like the professional. 50 to 75% is kind of like in the professional range returns. This is obviously not 50 to 75%, right? This is far beyond that. Did I make a mistake? Even if we assume, maybe I made some kind of mistake here, but this is what it looks like to me. So let's just look at this again. This just seems. Yes, $75. That's what we see the results here, right? It's pretty. To me, when I look at this example, I'm just like blown away because your return is, in futures, you look at like the Robins World Cup, the best returns are like 10 times, right? So it's pretty impressive. Now we kind of cheat in the sense that we're not trading, we're able to get the funding, right? But even if you were to take the initial capital times 10, would only get you to $125,000. So yeah, and again, a lot of these returns come late in the year. I agree with that. They come in these last little bunch here. So maybe it's maybe more realistically, let's make it half this, so it's not 400K, and let's assume that maybe even that's too realistic. But whether it's 100K or 200K, I think this is probably a lot more than many traders have achieved, than most traders have achieved, given a lower rate of return than most traders, or in terms of daily return, than most traders try to achieve as well. So very interesting. Let me know what you think of it. Is this realistic? Is it unrealistic? I mean, obviously it's hypothetical, and it's not realistic in the sense of it assumes that every day there's a certain rate of return. But yeah, it just I guess maybe what it shows is it's if you're trying to hit, either the traders who are trying to hit bigger returns percentage wise on a day are not very consistent, or something's wrong with they're not trading millions and millions and millions of dollars, right? I think that's what it means. Is that and I do agree this level of consistency is unnormal, not normal. You may have a losing month and somewhere in here, and so that would set this back. But still, this is what it looks like, right? So yeah, that's what it looks like if you achieve a consistency. Well, that's all then. So.